You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Tuesday, 28th day of January, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here or right now. We do 2 live broadcasts every trading day. Now, the first broadcast is our live training room. That's from 9:30 a.m. to 11:30 a.m. Eastern. That broadcast is private. It's reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial yet, when Michael joins us in a bit, he'll walk you through step by step exactly how to take the trial. It's a piece of cake, couple of link clicks, fill in a couple of blanks, and you're good to go. We'll get your indicators indicating today. Your trial will officially start tomorrow, which is midweek, but you'll still get 5 consecutive trading days. Anytime, it's a weekend, holiday, don't worry. When you sign up for the trial, you get 5 consecutive trading days, even if it stretches over a weekend, as it will if you sign up for the trial today. Okay. When the live training room ends each day, take a 30-minute break and come back for this broadcast, the afternoon broadcast, which, unlike the morning broadcast, is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join the afternoon broadcast live. The best way, you only have to do this once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. Going forward, what will happen is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there is a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Now, there will be days that you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is very easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. If you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can actually see how we've evolved over the years, from whence we came to where we are now. Obviously, you're not going to watch them all. Just jump around a little bit. Take a look at the history. It'll give you a better understanding of who we are, what we do, and why we do it. youtube.com/CFRN. Now, the daily schedule for our afternoon broadcast, it's right here each and every day. We start out with our daily devotional, a word of prayer, some news, recap of the alerts, and Michael joins us for a recap of what happened in the live trading room this morning. And then we'll do a little live trading on the TradingView platform and wrap it all up with our good word for the day. So let's get to the daily devotional. Now, this is day 7 of 7, winning the war in your mind. The scripture, Hebrews 13, verses 5 through 6. I'm going to share that with you from the Message translation. Don't be obsessed with getting more material things. Be relaxed with what you have. Since God assured us, I'll never let you down, never walk off and leave you, we can boldly quote, God is there, ready to help. I'm fearless no matter what. Who or what can get to me? Again, Hebrews 13, 5 through 6. Because like you, every day, I feel like I have more than I can handle. I rely on God to renew my mind. His truth is my battle plan. I continue to create new trenches of truth to replace my old ruts, so they will give me thought pathways leading to life and peace. Where do you need Jesus today? Right now. Where are your thoughts falling short of His life-giving truth? Are you stuck in a negative, hurtful, and poisonous rut? What will you do? You will use the 4 tools God has given us to fix our thoughts and win the war in our mind. We've talked about all of these over the past few days. The replacement principle, the rewire principle, the reframe principle, and the rejoice principle. So number 1, you'll remove the lie and replace it with truth. We know that we have an enemy who is seeking to destroy us. His weapon is the lie. Our weakness is believing lies. And if we believe a lie, it will affect our lives as if it were true. The problem is that we don't realize that the lies we believe are lies. Hopefully, the lies you need to defeat are now clear to you. 2, you will create new trenches of truth. Our brains have neural pathways, mental ruts we created through repeatedly thinking the same thoughts, which trigger our automatic response to external stimuli. To stop a behavior, we need to remove the lie behind it and replace the neural pathway. We dig truth trenches. How? You renew your mind with God's truth. Number 3, you will reframe. We cannot control what happens to us, but we can control how we perceive it. We all have cognitive biases that cause us to see things in ways that do not reflect reality. But we have the power to do cognitive reframing, changing how we view the past and the future. Number 4, you will change your perspective through prayer and praise. It's easy to feel overwhelmed by everything that is happening, but when we've had enough, God is enough. Not only is God enough, God is near. We stay mindful of His presence. When we do, it leads us to pray. Praying changes our brain, as does praising God. We praise Him for the who of who He is, even if the what is not what we want. As we praise God, He shows up and gives us peace of mind. Decide today that you will not think like the rest of the world. You will let God renew your mind. Instead of becoming fixated on what you see, fix your thoughts on Jesus. He made you. He will sustain you. He can carry you, strengthen you, and empower you to do what He's called you to do. You are more than a conqueror through Christ. God is more than enough, and nothing can separate you from God's love. Let God change your thinking. He will change your life. Let's pray. Heavenly Father, thank you for your promise to never leave us or forsake us. Help us to live free from the love of money and to be content with what we have, trusting fully in your provision. With confidence we declare, the Lord is my helper. I will not be afraid. Strengthen us to walk in faith, knowing that you are always with us. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Tuesday. Tomorrow is Fed Day. So let me give you the numbers from around the world. I'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is up 124 points. The NASDAQ is up 324. That's almost 1 3/4%. The S&P 500 is up 46. The Russell 2000 is down 6 points. We love to see all the major indices the same color, either all red or all green, because with futures you can be long or short and long again, all in the same hour if that's what the chart in front of you is telling you to do. But when you have an outlier or two, mixed markets, then there's a little bit of a tug of war going on. sort of behind the scenes. So on the days when we have all red or all green, that's the days when you have better follow through. Now the Russell's only down 6 points, so it's not a lot. By the end of this broadcast, we could see the Russell potentially turn green and join the other 3 indices. In the commodity basket, crude oil down 4 cents, trading 73.13 last. Gold up $29, trading 27.6740 last. That's a gain of a little over 1%. Silver up 45 cents, trading 30.87 last. That's a gain of 1.5%. In the Asian markets at the close, the Nikkei fell 548 points, almost 1.5%. The Shanghai dropped 2. The Hang Seng gained 27. And in the European markets at the close, FTSE up 30. The DAX up 148. The CAC down 9. So, we had a mixed day in Asia. We had a mixed day in the UK. And at the moment, it's a mixed Radio Tuesday here in the US of A. Now the Russell's only down 5 points, so it just might join the other 3 on the green side. We'll see. Seems to be leaning in that direction anyway. Let's take a look at the news. Well, we talked about this yesterday, and it's about all anybody's talking about. DeepSeek. Technology stocks dropped sharply yesterday as a cheap but powerful Chinese chatbot made waves in Silicon Valley, suggesting cutting-edge AI applications may be possible without expensive processors and intricate models. Known as DeepSeek, the company released its latest R1 model last week, claiming it performed as well as OpenAI's latest generation model at 3 to 4% of the cost per output. Officials said the model took just 2 months and less than $6 million to build, and relied on earlier generation chips to operate. The model is both free and open source, meaning anyone can take and modify it, and R1 has become the top free download in the Apple App Store. Analysts say DeepSeek likely won't displace US AI companies, but may reshape the industry's economics. Among those hardest hit was chipmaker Nvidia, which saw almost $600 billion in market cap evaporate, the biggest single-day loss in history, as shares dropped nearly 17%. Now, there's been all this talk about TikTok on your phone, they're spying on you. So along comes this new app, and it's tickling everybody's toes because it has to do with AI, and that's going to be 2025 will be known, I believe, as the year of AI. I mean, we got into it last year with OpenAI, but I think 2025 is going to be the real big one. So it's a top download in the App Store, and typically, Apple unlike the other carriers or other makers of cell phones, like the Google Play Store, anybody can put anything in there. Uh, there's not a lot of vetting in the process. Uh, but Apple, they actually try to vet and make sure that you're not getting malware installed on your phone. So, should you download DeepSeek? Yeah, I don't know. I'll let you make that decision. It's your life, it's your phone. Holocaust survivors and world leaders gathered at Auschwitz in southern Poland yesterday to commemorate 80 years since the liberation of the largest Nazi concentration and extermination camp. I just finished watching like a 6-part documentary about World War II on Netflix. And well, I don't know if you can say it was good because it was such a horrific thing, but it was certainly informative and educational. Now, more than 1.1 million people, mostly Jews, were systematically executed at Auschwitz during World War II, primarily by poison gas as part of the Nazi Party's plans to form an ethnically German state. Others in the camp died from mass shootings, starvation, and disease before Soviet troops arrived and freed roughly 7,000 prisoners. In total, around 6 million Jews were killed across German-occupied Europe from 1941 to 1945. Roughly 220,000 Jewish Holocaust survivors are still alive today, with ages ranging from their late 70s to over 100 years old. Separately, an exhibit featuring a full-scale replica of Anne Frank's home, where she hid with her parents, sister, and others before being discovered by the Nazis, opened in New York City yesterday. I don't have to go see the replica because I have actually stood in Anne Frank's house. And you can too. You just gotta take a little trip. Amsterdam. I'm sure you're all familiar with the story of Anne Frank. But to stand there in that house, in that attic, wow, really was a life-altering event for me. All right, NVIDIA here trying to make a comeback. NVIDIA stock rose as much as 2.6% pre-market today as the AI chipmaker began to recover from a massive decline the prior day. It shaved nearly $600 billion off of its market cap. Shares of the chipmaker later paired gains up less than a percentage point after the market open, and currently NVIDIA is up 6.5%. NVIDIA's 17% freefall Monday was prompted by investor anxieties related to a new cost-effective artificial intelligence model from the Chinese startup DeepSeek. Now, with everybody spending all this money and making all this money off of AI, suddenly here is a free open source model. Wow. I mean, that's pretty hard to resist, right? Yeah, and I'm sure that the Chinese who created this are well aware of that. Some Wall Street analysts worried that the cheaper cost that DeepSeek claimed to have spent training its latest AI models, due in part to using fewer AI chips, meant U.S. firms were overspending on artificial intelligence infrastructure. That created a concern among the investment community that NVIDIA's high GPU, graphics processing unit, or AI chip prices could come under pressure, and that demand for semiconductors could wane. NVIDIA's $589 billion market cap decline was the largest single-day loss in stock market history. Let that sink in. The DeepSeek announcements drove down not only NVIDIA, but the markets at large, with the tech-heavy NASDAQ dropping 3%. Chip stocks dropped across the board yesterday, but some names began to recover this morning. After dropping more than 17% to start the week, Broadcom rose as much as 3% pre-market today and was up half a percentage point shortly after the market opened. NVIDIA itself didn't express much anxiety over the DeepSeek buzz, calling R1 an excellent AI advancement in a statement Monday. Now, because it's open source, NVIDIA can just go download it themselves, and who knows what will happen next. JP Morgan analyst and Citigroup analyst both said in separate notes to investors that because DeepSeek used a process called distillation, in other words, it relied on Meta's open source Llama AI model to develop its model, the low spending cited by the Chinese startup, under $6 billion to train its recent V3 model, did not fully encompass its costs. We believe it's crucial to validate these costs before drawing conclusions, according to the analyst. One of the analysts said, given DeepSeek is based on leveraging cloud service providers, Meta and AI is still in its infancy, we lean towards the argument of continued strong growth in AI spending. Even so, DeepSeek clearly doesn't have access to as much computing power as U.S. hyperscalers, and somehow managed to develop a model that appears highly competitive. So everybody's starting to be a little bit suspicious. So we'll see. More to come. OpenAI today announced a new tailored version of ChatGPT designed for U.S. government agencies, a product launch that comes as the industry is still reeling from the breakout of a cost-efficient Chinese AI startup, and as President Trump has urged tech companies to stay ahead of the competition. Sounds like we're on the back foot. OpenAI says the new service, ChatGPT Gov, G-O-V, is meant to streamline the government's access to its models, and it will give staffers the ability to better manage their own security and compliance as agencies handle sensitive data. By making our products available to the U.S. government, we aim to ensure AI serves the national interest and the public good, aligned with democratic values, while empowering policymakers to responsibly integrate these capabilities to deliver better services to the American people. OpenAI says the special version of ChatGPT gives government agencies many of the same capabilities as its ChatGPT Enterprise tool, including custom chatbots that employees can build and share, and access to GPT-4o, OpenAI's flagship model. Now remember, tomorrow is Fed Day. From Bloomberg, buried in a rote U.S. Treasury survey released on the eve of the latest holiday weekend, was a question that all of Wall Street wants the answer to. What's the Federal Reserve's plan once it's done drawing down its crisis-era bond holdings? Fed officials who are meeting this week have said very little about the future of the unwind of assets, a process known as quantitative tightening that's been going on since mid-2022. We all remember quantitative easing, right? Well, there comes a time when you got to pay the band, and, well, here it is. Now they are under pressure to provide more insights as banks, including Bank of America, Barclays, TD Securities, Goldman Sachs, declare the Fed will take longer than they previously anticipated to end quantitative tightening, or QT. That's important. The longer the process takes, the greater the chance of draining bank reserves to a point of scarcity and roiling U.S. funding markets. It also increases the threat of boosting borrowing costs as markets struggle to find buyers for new government debt issued to fund the swelling budget deficit. Blake Gwynn, head of U.S. rate strategy at RBC Capital Markets, says you are getting closer to reasonable range of expected stop date, so you probably want to get your questions answered. The Fed's guidance matters for the U.S. government too. Treasury is expected to adjust the amount of debt to issue and where along the curve it will sell securities, bills, or coupon-paying bonds. Those securities offer a global benchmark for trillions of debt, from mortgages to corporate bonds. This is not your father's market. More from Bloomberg. There was a surprising winner from the market carnage that unfolded yesterday. A popular option strategy that bets on calm. The dispersion trade, which buys options in single stocks and sells contracts on an index, had its best day since 2020 as AI fears swept the market and sank some of the biggest U.S. companies. That's because the strategy, which is beloved by all manner of hedge funds and banks, effectively amounts to a bet on an index remaining calmer than its individual stocks. Monday's rout was so pronounced in tech and limited elsewhere that correlations between shares stayed low and index volatility remained contained, an ideal scenario for dispersion. On a niche play for hedge funds, dispersion has gone mainstream in recent years as banks packaged it into easy-to-access swaps for their clients. Versions of the strategy from BNP Paribas and JP Morgan Chase both had their best day in nearly 5 years. The CBOE S&P 500 dispersion index gained the most since 2022. The market tanks, but there's always somebody out there doing well. One last article, Supermicro, a leader in AI servers within the computer hardware sector. The company experienced a volatile stock performance throughout 2024, driven by fluctuations in the AI market. Recent financial performances in the second half of 2024, including third and fourth quarter earnings, as well as preliminary first quarter reports from November 2024, have prompted analysts to reassess the stock's potential. Supermicro has gained significant market share in AI servers, contributing to its recognition as a key player in the industry. Despite this, the company's stock has faced significant ups and downs due to market conditions and investor sentiments. Analysts are now considering these factors when adjusting their stock price targets. Their assessments will likely influence investor expectations and consequently the company's market performance. So there you have it. There's the news. I didn't put out any Logic 247 alerts Sunday night. I didn't put any out last night. I just looked at the charts and I think something's about to happen. I put out a few this morning, so those haven't had a chance, I don't think, to trigger. And maybe Valerie will have a recap of sorts this afternoon. But the concierge trade alerts, they did manage to go out. And got them out 5 minutes before the open, 5:55 p.m. Eastern. Now, if you're a member or trial member, okay, be sure to read this information up here. It's important. If you anything you don't understand, just ask and we'll give you an answer. So, 5 minutes before the market opened last night, all of our members and trial members had all of these targets: ES, S&P 500 E-mini, the Dow, the Russell, crude oil, the NQ, gold, silver, and bonds. Okay, 5 minutes before the open. The logic alerts, Logic 247, those can come out anytime around the clock, 24/7. Futures trade around the clock. We have traders around the globe, so our day session is their night session and vice versa. And on any given week, we average usually somewhere between 50 and 75 Logic 247 alerts. And over the last 34 weeks, I think, we've issued over 18,900 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. I think last week we ended up somewhere around 8%, 9% that were stopped out. So, again, all members and trial members had all of these numbers 5 minutes ahead of the open. So let's just go take a look at that. Start with the S&P. This is the daily chart. The daily chart's important. Institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. They can withstand a far deeper drawdown than you or I, and they can stay with a profitable position far longer than you and I might be comfortable with. So, whether you trade futures or stocks or crypto or Forex, whatever, ETFs, if you'll spend 2 minutes with the daily chart before you drop to your smaller time frames and start trading, you're getting a free look over the shoulder of the deep pockets that move price. You're also able to identify major areas of support and resistance that you otherwise won't be able to see on your smaller time frames. You can see this high here. Right? That was on Friday. Then we had the gap lower open Sunday night. Took us all the way down to the top of this trend line, and more important, the 24% fib retracement. Then we caught a bounce, and we managed to close above the BBC. Remember yesterday during the broadcast, we were just sitting on top of the BBC. Had this long wick sticking down, and this red body was just sitting here. But by the close, buyers came in, rallied it back up, closed us just above the 38% fib extension. Now we've got a situation where we know the pullback to the BBC, the green line, bull bear cross. We know the pullback to the BBC holds more often than not. And even though we spiked it, so far it's holding. But look what's happening. Now, we had such a huge gap opening Sunday night. It's going to throw things out of kilter for a few days. But as you can see, the step line has hooked right, reflecting this plunge. Okay, it's crossing blue and climbing. And that puts both of those indicators directly above today's daily candle. We're up against the 50% fib extension right now. Just above that right here. This is resistance times 2. Right around 6106, 6107. Okay. Price travels in legs, leg retracement, leg retracement, leg retracement, deep retracement, leg retracement, leg. Doesn't matter what time frame, daily, weekly, monthly. Doesn't matter what market, future stocks, whatever. That's how price moves. Price doesn't move in a straight line. It may move in a straight line for a very short period of time, but it's back and forth, back and forth, back and forth. Again, just spend 2 minutes with the daily chart of whatever you're going to trade. Glean the information that you can glean. Then go to work. See if it doesn't have an impact for you. All right. Now, yesterday, here's the gap lower open Sunday night. Took us below the lowest weekly zone at 60.35/36. Now today, we're back above it. So these targets went out last night, again 5 minutes before the open. All alerts, logic, and concierge are created on the 30-minute chart. The vertical line separates today, Tuesday, from Monday. Back over here is Friday. These are this week's weekly trading zones, and this is the lowest zone for the week. Now, we've known for a long time and talked about it for a long time. We've published the zones for our members every week for the past 15 plus years. We hit 15 years in December. Now, what we've always said is if we hit the lowest weekly trading zone by Tuesday morning, then there is an extremely high probability, and this is just based on history over the last 15 years, there's an extremely high probability that by the end of the week we'll be at the other end of the spectrum. Okay? Does it happen every time? No, very few things happen every time in the world of trading. Does it happen more often than not? Yeah. Remember, we still got this big gap here that needs to be filled before we can move higher. But it's early in the week and tomorrow's Fed day, and depending upon how the market takes Jerome's comments, I could send us back below, could send us higher. Probably it'll do a little bit of both. Now you'll get some volatility when the initial announcement is made at 2 p.m. Eastern, but the real volatility will most likely come during the 2:30 press conference, where Jerome will deliver his prepared speech and then take questions from the audience. So this was the candle that opened last night. These targets again went out 5 minutes ahead of the open. Price dropped to the VVC and the zone, both of which we expect to be good support individually. So together, that's support times 2. Support will always send the market looking for resistance. Resistance sends us back to support, to resistance, to support. And then things, as we headed into the London Open, you can see red and falling turned to blue and climbing. So we had a nice leg right there. A retracement back to the step line, the pullback held, and another leg. Then we got a deeper pullback. Came all the way back to the BVC. Now the pullback here held just like all of these did, but it bounced us up into red and falling, which is bearish. And so price traded through the BVC back down to test this zone one more time. Now we had a red candle all the way down to here, but by the time the 30-minute candle closed, we were back here. And then this was the 10 o'clock candle, okay, 10 a.m. Eastern this morning, and that sent us right up to the long target. We spiked it just a little bit. Now this target, you see right here where the step line crossed red and falling yesterday, and price failed to pull back to the BVC as it typically does. I don't know what just happened. My phone just asked me, do you want ChatGPT to check that? Oh. I didn't even touch the phone. Pretty scary. All right, anyway, we come back to the BBC and the pullback holds. And you got the perfect stack here. You got the step line, blue and climbing, the BBC. And so now we've made it up to this high right here. We haven't overcome it yet. But once we overcome that, then the potential is for us to make a very nice rally up to the zone overhead. And that would put us at the area where the market gapped down to on the open Sunday night. So we'll see what happens. Yesterday we traded through. Now, usually we reserve this for a Tuesday morning, okay? But this happened on Monday. But we're back above the lowest zone. We'll see what happens. On the Dow, this is where we opened last night, right at the weekly trading zone. We just consolidated. Only 3 things happen when you hit a zone. When price encounters a zone, 70% of the times consolidation, 20% of the times rejection, 10% of the time is the slice. So from the open last night, we pulled back to the VBC, pullback held, red and falling turned to blue and climbing. So we had a leg and a retracement, a leg and a retracement, and you'll notice that support times 2 right there, the VBC and the zone. And then we got a nice move up. Make it up to 45, 159. and then we pull back into blue and climbing, and the step line is starting to hook to the right. So it's directly above blue and climbing. If it crosses, if we consolidate sideways here a bit, then the step line will cross blue and climbing, and we'll most likely see another retracement back to the BVC. This was a big outside candle, a bearish engulfing candle here. The context was good. It's not a picture perfect example. I'd like to see that body a little bit ahead of that, a little bit above that wick. But nonetheless, it is indeed a bearish engulfing candle. And it happened right at 11 a.m. Eastern this morning. So next is the Russell. Russell got wild yesterday. And yeah. Okay, so this was the open last night. We dropped below the BBC. We hit blue and climbing. We hit the target. Okay. Pretty much to the tick. Support will always send the market looking for resistance. The pullback holds more often than not. Resistance sends the market looking for support, and it found it right at these lows from yesterday. Support sends us to resistance, back to support. And then we got a leg, we got above the BBC, got a retracement and a leg. We hit the zone, and now we're once again sitting right above the short target. Okay, so that's taking us through the Russell. So let us pause for a moment, and Michael will take the screens, give us a recap of everything that happened in the live training room this morning. Then we'll do some live trading on TradingView, and then we'll wrap things up with our good word for the day.
Excellent. Here we go.
Looks good.
All right. Well, good afternoon, everyone. Today is Tuesday, the 20th day of January, 2025. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. Now, there is no credit card required when you take the free trial with us, all right? Just click on that purple button. It's going to bring you to the registration page. On this page, all that we ask for is your name, your email. It's not this page. Close. On this page, all that we ask for is your name, your email, and your phone number. Then down at the bottom here, if you can use Ninja Charts, give us your Ninja Trade Machine ID. If you can use TradingView Charts, give us your TradingView login ID, all right? We got to get that TradingView login ID. Don't give us that, you won't be able to trade using the charts that we're using in the room in the morning, right? Because these things are only on NinjaTrader. Now, today, it's kind of back and forth a little bit today. I mean, we ended up doing a little better than yesterday. We had a few more trades, still a little better than yesterday. We got the goal for the day sooner, just a little bit sooner, 2 minutes sooner. But if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 28th day of January, 2025. We're up 150 ticks on the NQ. We're -8 on the Russell, +43 on gold, and +8 on the ES. Which is $1,240 contract on the morning session. Today, it took 2 minutes and one trade to get to the goal for the day. At that point, we're up $1,000. We had 8 ticks on the ES at that point. And we took a total of 41 trades this morning. So on the month now, we're at $28,477.50. That's crazy. $28,477.50 over 17 business days, averaging $1,675 per contract per 2-hour business day. Same thing on the year right now, 17 business days. The 24/20 blueprint so far this year, this month, if you were to quit trading when you get the goal for the day, you would have worked almost an hour and a half. And you would have made with one contract $3,227 quitting when you get the goal for the day. If you decided to keep going on, well, then you could have made more, but you could have lost all that too. But the average hourly rate is $2,225. Now, the thing that I want to check, $28,477. I don't think we've had a month like that. 28,000. I go back to the year before that. 2022, I think, is going to be the big year. I'm curious. This was the end of 2023. Nope. 2022 was the big year. That was when Ukraine first got in. There it is, $34,145. That was our best month ever. So we could get that by the end of the week. We could hit that. And we actually made $238,558 with one contract that year. I expect we'll do better than that this year. I mean, that was crazy that year. This year is just normal now. So as of right now, we're at $28,477. We have 4 business days left this week. I don't know, we're going to have 4 $1,500 days. 6,000. We'll see. We'll see how it turns out. We could have one big giant day. Who knows? We'll see how it turns out. We do have some high impact news. We got FOMC coming out tomorrow, so we'll see what happens with it all. Anyway, the trades we took. All right, on gold, we took a bunch of trades today on gold. So let's get into that. All right. 4 break-evens in a row. That was tough to do right there. Our first trade on gold was right here. We picked up 15 ticks. Then we had break even, break even, break even, break even, break even. And then we picked up another 12 ticks. And then we picked up 8 ticks, I think, to get to 35. And then another 8 ticks to get to 43. And that was where we ended it on gold at 43. There were some really nice trades here during the break. One right here. Perfect trade right there. Came down, just tapped it right there. This was also a trade, not actually the black went with it. Probably wouldn't have done that. That was a trade right there. That would have been a break-even trade if you got short right there. It went at least 5 ticks into profit. So that would have been a break-even trade right there. This one right here would have stopped out. Would have got it right back on that one. And that would have been a break-even. This would have been profitable. And that brings us to where we are right now. Almost in the trade right now, but not quite. That was gold. We ended up plus 43 on gold. Now the Russell, we were back and forth around 0 on the Russell today a few times. You can see we started out here. Wait, something you can see the whole day in one screen. The whole morning session is right here on one screen. We started out on the Russell right here. We had 5 ticks profit on that. Then we had a break even, then 5 more ticks to get us to 10. Then 5 more ticks. It's all right. And 10 more ticks to get us to 20. Then we had something there that I didn't register, and then we stopped out and went from 20 down to -5. And then we went 10 ticks there to get us back to +5. And then we were -25 there to get us to -20. And then we picked up 12 ticks there to get us to -8. So there's one trade I didn't register in here, this one right here, but that's okay. At the end of the morning session here, you see there was a huge move down on the Russell. I didn't see that, and it must have been a big move on all the other indices too. But during the break, there was one nice trade right here, and that was it. Really, just one trade during the break. That's kind of rough. There's usually a lot more trades than that. Now let's see, did the ES have a big move too? Yeah, the ES did too. It was just in the other direction. No, I guess it was all right here. This is when that big move down was happening on the Russell. But the ES recovered all of it. Now, we had a few trades here on the ES. We started out over here. This is our very first trade right here. We got the goal for the day on that trade. For those of you guys who may be new here, who don't follow all the time, when I start out at 9:27 in the morning, a lot of times between 9:27 and 9:30, in this period of time right here, there's going to be an opportunity to get the goal for the day in that little period of time right there between 9:27 right here and 9:30. That's why the spreadsheet looks like it does. If I start at 9:27, all those ones you see in there, that's getting the goal for the day on like the first trade within the first couple of minutes. It usually sets up and you usually get it right before the open or right at the open. Sometimes it goes the other way and you end up stopping out right at the open, but most of the time it's going to go in favor of the trade. All right, and that's what happened this morning. We got that one right there. We picked up 8 ticks right away. I missed that one. Then I stopped out on that one. That put us at -2. Then we got 12 ticks on that to get us back to +10. Then we had a break even and 8 there to get us to 18, then a couple more break evens. Then we stopped out and went down to 8. Then we went back up to 12, so we got a 4 tick there. Break even, then a 2 tick there, got us up to 14. Then we stopped out again, got us down to 4. Then we had a plus 11, got us to 15. Then a plus 5 that got us to 20. Then we stopped out again, got us down to 10. Then we had a plus 8 there that got us to 18, and then we stopped out again. They got us down to 8. So we have more stop outs than normal today on the S. 1, 2, 3. I think we had 4, right? 4 stop outs today on the S, and we still ended up with plus 8. Now, after killing it yesterday and being plus 90 on the S, it was a little harder to trade today. I mean, I don't think I missed too much in here, did I? Oops, it doesn't look like I missed much at all in here. I don't know where I grabbed that from. There was a spot right here, but I did take that. Yeah, I don't think I missed anything at all in here on the yesterday. I missed this one right here. I missed this one right here. That would have been a decent trade. I missed that one. That wouldn't have been. Anyway, it is what it is. That's how we ended up at plus 8. During the break, there was one long trade right there that would have worked out just fine. A short trade right there that would have worked out just fine. A long trade right there that would have stopped out. A short trade right there that, depending on where you got in, it might have been break even, or it would have definitely been a stop out. Would have gotten back there on a long trade, then again there on a short trade. Here, this would have been a break even. I'd go 4 ticks into profit. Over here, nice profitable trade. Over here, a nice profitable trade. Over here, a profitable trade. Over here, a profitable trade. And right here, this last one would have been a stop out. That was it. So there were a lot of trades, a lot of opportunities, and several times you could have gotten your goal for the day today. That was the ES. The NQ, we didn't trade the NQ all that much today. We ended up with 150 ticks, but it wasn't 2 75 tick wins. It was 1 75 tick win, this one, plus some other stuff that we talked about in here. We started out here, we got 4 ticks on that one, and then we stopped out there minus 60, so we're at minus 56. Then we managed to get minus 56, we get to plus 19. So I think that was a 75 tick win there to get us to plus 19. Then from plus 19, we went up to plus 43. Then from plus 43, we went to plus 75. Then we had a break even, and then went from 75 up to 150 on this one. Now, during the break, there was one long trade right here, and the black went down with it. There was a short trade here that I don't know if it gave 20 ticks in profit or 5 points. If you got the exact entry point right here at 13 and a quarter, it had to drop down to 6. I guess it did. It did. So you would have had a break even on that one. This one right here, that would have stopped you out. You would have gotten it back on that one and that one. And that was it on the NQ. There wasn't a ton of trading to be done on the NQ today either. I'm sure I missed some trades in here, but you know, I was doing a little bit of the training in here. I'm sure I missed some trades in here, probably. But, well, we did get 40-something trades off today, so it wasn't like we weren't trading often. And that was it. That was it, guys. Now, for those of you guys who don't know, I use the Sierra charts for the Sierra DOM for the ES this morning. And I'll bring it up here and I'll use it again if you have any trades come up here in this session. Now, for anybody that's watching on YouTube that may have just logged in on YouTube, if you haven't taken a free trial with us, go here to mytradingatq.com, click on the purple button right here. There is no credit card required for the trial. Click on that purple button. It's going to bring it to this registration page. Just fill it out. It takes 30 seconds. Fill it out and we'll get your stuff going for you. Okay? Now, the Sierra DOM. Here it is. Here it is. I traded on the Sierra DOM all morning for the ES. You see the numbers right here? 1200 by that. So it's favoring the upside right now on the ES. We don't have a trade set up for it. But if we did, it'd be just like I do it with the DT Pro DOM. You know, if we did have a trade set up, then all I would do is drop my order on right here. I just got to left click right there, and it's going to put me in at the best bid right there. right? If I were doing it on the S, I drop it right there. It put me at the best bid right there. Okay, same thing works with Sierra charts, Sierra DOMs. So that's it. We do have some people that have already made the transition to the Sierra stuff, and we have some people that have made the transition to the CQG stuff. So, you know, congrats for everybody that's making the change before they have to. And next week is going to be a bit of a mess because everybody's going to get forced out. And I'm going to be using just Sierra DOMs next week. Just Sierra DOMs next week. So I got to I'm trying to get used to it right now. I was figuring I'd use the S DOM all week. So like right here right now on the S, if that dropped down one more tick, then we'd have a trade right here. Right? It's too late for me to get into now because it's already gone up, but 93.75 ran up to 95.25. That was a trade right there, right there. That was a valid trade. It's too late for me to get into it, but it was a valid trade. Now, I'm pretty sure there's a way to keep that on top, isn't there? Duplicate, perform, piece of the scale. Window. Always on top. There it is right there. Hey, yeah, that's what I need to do. Always on top. It's right in here under window. That's all I have to do. And it's always on top. Slide it over here. It's like the little pin thing on the DT Pro ones. This little pin, that's the same thing. That means always on top. Okay. So if we had a trade coming up, this spot right here, that 95.50, that's where price currently is, the 95.50. Right. I'm going to figure out how to make that highlighted a little bit better. But the way things are bouncing around all around it, that's just prices moving in and out. Okay. Is everybody good with this? Anybody have any questions about this? All right. Slide this off to the side. If we get another trade set up in there, I'll take it. Okay. But if we don't, well, I won't. And nothing's giving us anything right now. Does anybody have any questions about anything at this juncture? I just thought of something. There was a video that I had watched a while back. Okay, it's sent it to Scott. It is now 1:13, so we have 17 minutes left in here. And we're eager to take any trade that comes up. We missed the S one because it moved too much into profit. It was right here. The open of this bar right there was the trade. And we'll just wait and see here. And there it is on the yes. All right. Now it's still okay to take the trade, so I'm just going to go right there. All right. So I just left clicked right in here. Now this is where I entered. This is where price currently is. if price moves down into profit, I have the keystroke for break even is Control Z is what I set it to. So if this moves down below here, it's going to go 4 ticks into profit for me to bump this to break even. If it does go 4 ticks into profit, then I'll just hit Control Z and I'll bump this stop all the way down here to break even. Okay, and then I'll just drag it like I normally do. I mean, I could just drag it right now if I wanted to. I could just drag it up and down. But now's not the time. Not yet. We need to get some profit out of this first. See how the blue led into the overbought. That means this is a valid trade here. Okay. And it's the only one that's given us a trade setup right now. Okay, so we're 5 ticks, 6 ticks, 7, and we're pretty close to our stop. Our stop is right there. I think I'm going to stop out. It's going up a little too far here. We're 1 tick away from the stop right there. Didn't get it. It could come back. If you look at it, the leg length, this actually, if the trend is going to end right here, then it could retrace this complete leg length right here, but I think it's going to make another one like this on the way up. I think it's going to stop us out. And it did. That is it. A stop out on the yes. Oh, it is what it is. It gave a short trade right here. No, that is a trade we just took. That's the trade we just took. The short trade right there is one we just took. All right, let me draw that in for you. Here it is, right there. It's my 5th stop out on the yes. So now we'd be just a little below right now on the yes. Well, we are just a little below right now on the yes. Minus 2 ticks. There was that one trade that I didn't account for though. How do the blue and black lines work together? The blue and black lines on this down here, you mean, Joan? You got your permanent demo on CQG, you mean? I'm not sure what you're talking about. Oh, Bob, you said the blue and black lines. Okay, okay, well that's good. You got your permanent demo on CQG. That's good. And Bob, you're talking about these down here. Sorry, I mixed you two up. Bob, the way that these work together, you want to see the blue line move without the black line. You want to see the blue line get into the oversold by itself or get into the overbought by itself without the black line being with it. You want to see divergence between them or separation between these lines. That's how they work together. They work apart, actually. You want to see them separated. And when the blue line gets into the oversold by itself, they're separated, or if it gets into the overbought, in this case right here, well, here, let's just look at gold. This is an example of it. Right? When it gets into the oversold by itself like this and the black's not there, you buy the open of the next bar. Right? Same thing right here. When it gets into the oversold like that, you buy the open of the next bar. When it gets into the overbought by itself like this one right here, you sell the open of the next bar. Okay, right here, get in there by itself, you buy the open of the next bar. And you know, there weren't too many selling here. There's one right back here that I took today. He sold the open of the next bar right there. This one right here, sell the open of the next bar. I missed that one. This one right here, sell the open. It's actually the open of this bar that I sold, and I ended up taking some profit on that. I don't know why that bar is so long. This one right here, you would sell the open of this bar. Okay, over here, you would buy the open of that bar. Over here, you would buy the open of that bar. That's how they work together. Okay, they work together to be separated, really divergent from each other. Okay, Bob, that's what you're looking for in the trade.
Yes, Bob, sometimes it does go sideways.
Yes, sometimes it goes sideways, and then you end up stopping out. That's why we have stops on every trade we take. Now, this one right here, for instance, it went up here, I shorted it, and it ended up going sideways. It hasn't even started going down yet, but I stopped out on that one, so I'm not in that trade anymore. You don't end up winning every trade. If anybody says they win every trade is, well, I wouldn't let them babysit my kids. Okay. My in-laws. What we're looking for here now, we want it to go down, but it's not going to be by itself. What you're looking for, Bob, you really want to see the blue get into the overbought, the oversold by itself. Now, when I shorted this one a few minutes ago, right here, not on this line here worked out well. If I would have taken that, that worked out well, but I shorted this right here when all I could see was that the blue got into the overbought by itself like that. I sold the open of the next bar. That's all I knew about it at that point. It's time to sell the open of the next bar. So I did. I sold the open of this bar right here, the open of this bar, and it stopped me out. That's why I have a stop. My stop is 10 ticks, and it stopped me out, minus 10 ticks. Now this one right here, if I'd have been on my game on that one, I'd had the trade on there, and I'd have been long on that, and it would have been the bar after where that line is. So I'd have been long at the bottom of this bar right here. And if I'd have done that, I probably wouldn't have even bothered with the short trade right here. I'd have been in the long trade still, taking profit. Okay. And this is my 5th stop out today on the yes, I think. 1, 2, 3, 4, 5. 5, yeah. 1, 2, 3, 4, 5. It's my 5th stop out on the yes. There were some really nice trades on the yes, but that's why we say you get the goal for the day and you put the mouse away. You stop trading. Every time you trade, you put your money at risk. So if you don't want to put your money at risk, get in there, make your money, and stop trading. All right, so they both went down to the oversold here, so that's not a trade. Both went down to the oversold here, so that's not a trade. We just don't have any trades happening right at the moment. Right now, yet. I'm trying to create something that'll capture that. I actually did create something that would capture that when it goes sideways like that. But the way that it works, sadly, is if it thinks it's going to go sideways, then it doesn't go anywhere. It won't even print the line. If it gets to the point where it's going to go sideways, it won't even print the line. It'll wait until it's not going to go sideways, and then it'll print the line and go up and then come right back out. So it'll be like they have a line back here, and then you'll have one because it takes 2 bars to get from oversold, minimum of 2 bars to get from oversold to overbought. So we get in the middle, and then it'll be searching up here to see if the next one is going to put it up there, and if it's going to go sideways or not. And if it's going to go sideways, then it won't print it at all. So you could have a couple of bars with no line at all, and then it'll print from here to the next one that's not going to go sideways, like here to there. So I'm working on it. It's a work in progress. I have like 100 of those works in progress. Eventually I finish 1 or 2 at a time. bring them to fruition, but I don't know when that one's going to happen. All right. So we are just waiting. I can go down to a smaller time frame on the NQ. It'll probably give us some trades. So I go back down to the 31 range. Might get a trade or two developed from there. Now it's the same stuff on the 31 range. It's just that my stop isn't as big. See that? There's a trade right there. Ask and I shall receive. Now, the thing about it is my stop needs to be quite a bit smaller, and it goes to break even after just 4 points in profit. So my stop should not be 60 ticks, it should be 48 ticks. So if you start going in that direction, then I will go adjust my stop by 12 ticks. Okay, but for right now, well, I'll just leave it here. I'll go up and adjust it. 12 ticks. 82, 3 points, it's gonna go down to 79. It's 12 ticks. Now my stop's in the right place, and now my stop's going to break even. Okay, I'm just locking 1 point on this. And now I'll lock in, what was I at? 575 down to 275, a minute 675, so that's 16, 20, 24, 36, 40, 44, 48, 52, 56, there's 75 right there. Get it, get it, come on, get it. We're so close. It's gonna get it. $56 or 75, what's it gonna be? 75, excellent. All right, there you go, 75 ticks. And it was the same exact stuff. You wait for it to go up into the overbought, you sell the open to the next bar like I just did. And that was in the 65.75. So it was a pretty good entry for me right there. It just gave me 75 ticks. How easy is that? 10 contracts on. That was $4,700, I think. Right. 75 times 5. I'm sorry, $3,700 times 10. $3,750. $3,750. That was a nice trade right there. Got a long trade right here. It's not too late to get into on the Russell. I'm going to try to fill right here. I haven't filled yet, as you can see. The best entry would have been 1 tick lower than that, I think. Yeah, 94.8. Okay, but we'll take 94.9. We're only off by 1 tick on that. But you see this one right here, Bob, I don't know what it's going to do. It could go flat. It could go sideways and flat right here. But what I think it should do is this. Pin this. We've done this leg up, and this is the leg down. So if we're going to do a 50% retrace, it should be right about there. They should have another leg up this big right here. That's what should happen now. Okay, you should get another one of these guys from wherever the bottom is right here, like that. Okay, I don't know what will happen, but that's what should happen. Do you see what I mean? So when you're doing your funding thing, I'm not sure how they work with the micros. I think you can do up to 10 micros at a time, right? Or something like that. But if you're going to do the Russell, I mean the NQ, with the big stops that the NQ has, you might want to do like 5 micros instead of 1 regular contract, so that you don't get that drawdown. that big drawdown that you can't, I know there's a daily drawdown or something like that you have to be careful with. Okay, the ES is about to give us a trade if we get an up close. The NQ is about to give us a trade if we get an up close. And we're in the Russell right now. But the ES and the NQ are about to give us short trades. The Russell's got us on a long trade right here. The gold is about to give us a trade too on a down close. That'd be a long trade too. All right, so we're about to get our trades over here on the ES and the NQ. And hopefully the Russell's going to pull it together here. We need 10 ticks in profits. It's right there for me to hit break even on that. Okay, almost there. There it is. Break even on the Russell. Okay, now we don't have a trade on either one of these. Now the Russell should make it all the way up to here, right? 2,300. That's a good place for it. Stop. Look at my stops even before that. My target is way up there. So let the Russell do its thing. And we'll see if these two over here give us any trade setups. Oh crap, I just realized. I ran out of time. Sorry guys. It's having all this fun. Anyway, all right, so we will wrap it up. We're in this trade right here. I'm going to lock in a little bit of profit so we have a profitable trade. All right, we had one stop out, and now we'll have one profitable trade. Didn't we have a profitable trade on the, yeah, we had a really big profitable trade on the NQ too. We had a 75 ticker on the NQ, a minus 10 on the ES, and right now we're sitting at +4, +5 on the Russell. Okay, I'll let the Russell play out here while we're still going, and then I can pass it back out to Fabulous Phoenix, Arizona. I'll lock in 10 next chance I get. Oops. Well, I'm out. 10. All right, so that's it. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here, mytradingiq.com, purple button. No credit card required. It's going to bring you to this form. Just fill it out. And that's it. With that, we can pass it back out to Fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, I am.
Excellent.
Okay, recap of the morning session.
Today it took 2 minutes and 1 trade to get to $1,000 with 10 contracts.
Good job.
Thank you.
Okay, we'll pick up where we left off on the NQ. Here we go. Alright, remember the vertical line, separate today Tuesday from Monday. There's that gap lower open Sunday, and then back here's Friday. These are current weekly trading zones. We are now back above the lowest weekly trading zone. Everything I said earlier about when we get to the lowest weekly zone or highest weekly zone by Tuesday morning, history over 15 years has shown us that price may very well be at the other end of the spectrum by the end of the week. If that were to happen with the NQ, then that would put us way back up here at or near 22,510. But we opened last night just below, right at the lowest weekly trading zone. Came down to the BBC, the pullback held, caught a little bounce up the balloon climbing, which turned to red and falling and took us back to the BBC, and again the pullback held. Then we got a leg and a retracement, a little leg, and then we dipped deep here. This was at 9:30. This was the opening candle on Wall Street. We came all the way down to right there. We didn't quite get to this low here. Buyers came in early, took us back up, got us above the BBC, above the weekly zone. So we had a leg, we had a retracement, the step line held as support, and so right now we're sitting right on top of the long target. Now the step line, it's starting to lean to the right. So the step line is directly above blue and climbing. Once that step line crosses blue and climbing, what typically happens is price will retrace back to the BBC, and then it becomes a question of, is it going to hold or not? It holds more often than it doesn't, but eventually it trades through. Okay, so that will be the question if price comes back here. Now, if the step line doesn't cross and we start to move higher, we look left here and we can see we've got a potential obstacle or resistance right here, and then again right here, and then of course at the zone, and this gap. We're 2 days into the week and the gap from Sunday night has still not filled. Crude oil. This was the open last night. Price was trapped, resistance overhead, support below. Finally, blue and climbing, crossed the BBC, and so we got a leg right up to the zone. And we consolidated sideways at the zone for a number of hours. And then we got a little boost to the upside, turned right around, came back to the BBC. Even though we spiked it, it held. So we get a leg and a retracement and a leg. We hit this weekly trading zone. Okay. We spiked it a couple times. Now price has come all the way back down. We've gotten below the BBC. We got red and falling. We just had a bearish cross right here. And price came almost all the way to the short target. We hit the long target, but the short target, the low was 72.93. So about 8 ticks from touching the target. Red and falling became resistance, and that sent price to where it is right now. But again, look at the step line. It's starting to hook to the right. If the step line crosses red and falling, then the most likely thing to happen is for price to retrace back to the BBC, and if it holds, we get another leg to the downside, and that might eventually take us to the short target. If price overcomes the BBC, then it's got to deal with not only this weekly zone, but the bearish cross where the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. Same is true of a bullish cross, just in the opposite direction. Gold. Gold spent hours consolidating last night. Finally reached down, tagged that short target. Okay. See right here where the step line crossed red and falling, short target. And from there we got liftoff. We got above the weekly zone, got a retracement to the BBC, the pullback held. That took us to the target, through the target, to the zone, through the zone, and now right here. See where that step line crossed blue and climbing? Roughly 27.71/72. Potential resistance there. Now this is a nice strong candle. It might break through. If it does, then anticipate resistance at this zone, 74/75, where we ran into resistance yesterday. last but not least, silver. Very active. This was the open last night below the BBC. Blue and climbing, turned to red and falling, and it took us almost to the target. You only need 2 pennies to get your goal for the day. Buyers came in right here, ran us up to the BBC. Resistance would set us back down to the target, and we printed a candle below the zone, but that quickly reversed, and we got a leg and a retracement and a leg and a retracement and a leg and a retracement, and now we're right at the long target, 30.92. So we're the step line cross balloon climbing right there. There's the target. One last look at the daily. Remember, we were at the 50% fib extension. We've overcome that, and we've got resistance times 2 right here, potential resistance times 2. If price can get through that, in fact, price has to get through that in order for us to close the gap from Sunday night. And then you got the 62% fib extension, and then you got the high from Friday at 61.62. And then you've got a couple highs here you want to watch for. And then, before you know it, we could have a new all-time historic high. Just depends on how bad this deep seek rattles the markets. I mean, they're making quite an effort to come back after. I mean, Nvidia lost more in market cap yesterday than any other stock in the history of the markets. Overcoming something like that, no easy task. To become a member, go to mytradingiq.com or just simply send an email to support@cfrn.net. In the subject line, put, "I want to become a member." In the body of the email, put your name, put your phone number. We're not going to call you, but we're going to send you an email. Explains what it means to become a member, and there will be a link you can click if you decide to become a member. You get 2 hours of live training every trading day. This is an interactive environment. Live markets, live trades, real money. You're trading along in your demo account to qualify to go live and asking every question that pops into your head. Because the strategy is pretty simple, pretty soon you'll run out of questions. So along with 2 hours of group training every trading day, you also get private one-on-one mentoring, no extra charge. The strategy that you learn, the indicators that you own as a passport holder, they're fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets, all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. The cycle has been in place since the inception of the markets and will remain in place till the markets cease to exist. Why? Because that's how markets work. Everything a trader needs, all under one roof, one low price. Just send that email to support@cfrn.net. We'll get you up and running. And you'll also get the golden key to open all the private channels in Telegram. We have public channels, we have private channels. You'll have access to all of them when you become a passport holder. So, let's wrap it up with our good word for the day. Sensing and seeing God. Corinthians 2:10. But God has revealed them to us through His Spirit. It's 1 Corinthians 2:10. The Bible says, "Eye has not seen, nor ear heard, nor have entered into the heart of man the things which God has prepared for those who love him. But God has revealed them to us through his Spirit." The Holy Spirit compensates for our sensory limits by enabling us to conceive things we cannot perceive with our five senses. Think of him as a sixth sense. That sense must be cultivated, matured, and fine-tuned. And that can only happen when we spend time meditating in the Scriptures and fellowshipping with God in prayer. Until we are awakened by the Holy Spirit, we are unaware of our need for God, of the spiritual warfare that is being waged all around us, and of what God is doing all around us. One night Jacob had a dream in which God appeared to him and said, "I am with you and will keep you wherever you go." Genesis 28:15. When he awakened the next morning, Jacob said, "Surely the Lord is in this place, and I did not know it." This is none other than the house of God, and this is the gate of heaven. Genesis 28:16 and 17. Jacob went to sleep and woke up in the same place, but he woke up a different person. After his wake-up call, Jacob saw God every place he looked. So today, ask God for a spiritual epiphany. Pray, "Lord, show me what you want me to see. Teach me what you want me to know. Lead me step by step in the path of your perfect will." That's a prayer God will answer. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.